Hey everyone, welcome back to the Driven to Succeed Real Estate Podcast. I'm your host, Brandon Olson, and I have a returning guest, Steve Furlong, another mortgage loan officer. And today we're going to talk about protecting your database for realtors and why that's important, what's happening in the market from other bigger agencies potentially stealing your clients and so forth. We're going to dive into even talking about mortgage servicing and why having your local lenders such as us represent your clients, but more importantly, making sure that we're talking to you about reaching out to your clients, protecting that database because it's looking like it's getting stolen more and more every day. Don't you agree?
I agree. Yes, this is a very exciting topic, a very important topic, and hopefully it doesn't come off like we're delusional about AI and scared about the robots that are coming. But the robots are coming.
100%.
Yeah.
I'm going to start off by talking. We talked about it a little bit, but what I was getting into is that now with the robots, people are if you're just casually browsing anything to do with homes, you might be getting bombarded with as a client, as a somebody doing a potential home search. Redfin, which is now purchased by Rocket, and they as soon as you get into their grasp, they start reaching out to people, and this is why it's important for you realtors out there is that your client base, if they already have a home they just bought 2 years ago, but they may check a value on their home or something, all of a sudden they start getting this stuff. What happens is they reach out saying, use one of our professionals and we can give you this much in incentives on purchasing a home, whether it's discounted rates, all these other things. So now as a realtor, you maybe sold a couple homes, they're getting bombarded over here and they're getting pointed to another agent. So protecting your database is very key. I mean, we're talking about what they spend. They've spent $1.75 billion
Billion with a B.
with a B.
Okay.
Yep, on Redfin.
Wow.
Right. So what is there? 50 million users. Redfin brings roughly 50 million users to the table. Top of funnel lead source, right?
Yeah.
And then they get their agents. They have all the Redfin agents, and they hook them up with Rocket Mortgage. Everybody knows how big Rocket is. Number one mortgage servicer out there. Doesn't mean they're always the best. In fact, I typically get 5 or 6 transactions a year from them. But what do you see?
I think some perspective on this is probably the first most important thing. As a realtor, this is the number one thing. If you're planning to retire in a couple 3 years, just turn this off. It doesn't matter to you anymore. But if you're in your business for the duration, you're going to want to listen to the next 20 minutes because it's a very important thing to understand how data is being used and how data works. And so think about applying for a mortgage and the amount of data that you have to supply to get through underwriting. We get everything. I mean, we know your history. We've got all of your employment, your financial information. We have your social security number, your birth date. We have your cell phone number, your email address. We have your last addresses, the data that comes in from the credit bureaus. And do you think we just put that data on the shelf and let it sit there and do nothing for us? No. Now, when I say us, I'm talking about the collective mortgage industry. So if that doesn't start to raise your heart rate a little bit already, it does mine. So let's talk through this.
Yes.
Okay. So what do we do? SWBC Mortgage as a servicer. What do we do? Well, we send out monthly statements, or we have our website where our clients can log in and get their mortgage information. But as a servicer, we're in front of our clients all the time, right?
Correct.
So that's part of why servicing is so important. And what does that do when you're in front of your clients all the time?
Top of mind, period.
Exactly.
Right.
And it starts to build trust, right?
Correct.
And so as a realtor, I know that you're thinking I should, be in better touch with my book of business. Yeah, that's paramount. Staying in front of them, being top of mind. We all know those things are important. As a servicer, that's already built in for us.
Correct.
And so for SWBC, when our clients log in or if they get paper statements, your name is there, my name is there. They see us regularly, so that helps.
Yes.
What else do we do? What do you do with your book of business?
Well, I try to reach out to my clients 4 times a year, right?
Hmm.
Birthday, hey, happy birthday. It's friendly. I hope you're having a great day. If they answer, what do you got planned? Whatnot. Loan anniversary date. And then just if there's like major things that happen, like specifically right now, last couple of years, high interest rates. Some people are even close to 8, if not above.
Hmm.
When rates come down, like here, refinancing. Hey, talk about strike rates. Here's what it needs to be. And then there's just overall like, hey, have you looked at, your payments going up because of escrows, right? And that's part of the servicing. Our servicing pays your, if you have your escrow set up with us, which the vast majority of people do, right?
Yep.
Taxes are paid in Minnesota twice a year,
Yep.
and your insurance. But sometimes there's a deficiency,
Yes.
right?
And think
Which
about
is
home
very
insurance lately. Yes.
doubling,
Hmm.
right?
Right. So I am terrible at this. I have done a very poor job at staying in touch with my book of business, especially since 2020, because we refinanced everybody to 3%. And so why, my mentality is why even call those clients? And that's the poorest mentality. Those are the people that already know, like, and trust us, and we should stay in close contact with them. So as a servicer, it helps us do that. But depending upon where the mortgage is serviced. So the number one question that you could take away from this is asking your loan officer, hey, where do my loans get serviced? Where are my clients serviced? Where is this loan going after you close it and fund it? Do you keep it? Do you send it somewhere? Where do you send it to? And especially with brokers, it gets sent out into secondary markets. They pick the investor, and the investor, and I don't want to knock brokers here, but the investor that they're choosing is giving the best price. And why is it that these big national servicers are giving better pricing? It's because they want that servicing, because they know it's a refinance. It's the data that they're getting, and they're going to be able to use that data. I have 4 mortgages with Penny Mac, and I get probably 2 letters a month, phone calls regularly, incentives in my email from Penny Mac because they service my loans. And they're not even the best at this.
Right.
Yeah. And I had nothing to do with Penny Mac. Just to name one. Wells Fargo's great at this too. And they do a good job of sending out letters. Hey, we're here to help if you're thinking about buying a home. I mean, for any of you that have a mortgage with a bank, you get stuff in the mail that says we'll help you. And they put incentives together for that. And there's a reason for that, because they know they already have you captive. And there's this know, like, and trust thing. And if they add a little bit of extra incentive there, they can bring you in. So
Yeah. And going back to that, so what we're trying to say is, as a realtor, if this loan is being sold off and that new servicer is taking it, um, that data is going elsewhere, and they're building what this industry, this disruption that we're seeing in the industry is using that data. And now they're getting bombarded with all that information. They built the trust, and they say, hey, I have so and so that's in your area. It's an agent. If you're looking for a new house, boom, that's who's getting that call, right?
yes.
And part of the incentives that they are starting to build, and the biggest disruption, we were just talking about this, is that there's a new company coming out. It's called Hoot, HOOT. I think it was the last four. I think they even said it was like the last 4-digit domain name that they could get, and it's an owl with a house, right?
Yeah.
And but they are putting together. It's a new company, and they're really focused on the mortgage side, getting the mortgage first. I've said this coming from the car business. People came in looking for a car and said, "Oh, I got to go to my bank and get financing." Well, no, we got it here in house, right? Same thing as realtors have always been more conditioned that the buyer's coming to them first. Well, they want to do a disruption where it's the opposite way around. At the same time, they're saying what they want to do is they're going to take this lead that comes in online, and now they have agents that they're going to pay $2,000 commission. Period.
That's Hoot's model.
That's Hoot's model.
2 grand.
2 grand.
Okay.
But they're still going to charge 3% commission, right?
Oh,
The rest of that money is going to go towards incentives to buy the rate down.
uh-huh.
So if you're a real estate agent and you're not part of that network, or if you want to be on that market and just get 2 grand per transaction, that's what's going to happen. But that's their model. I was just on a call with them a couple weeks ago. being recruited, right?
Hmm.
Join our team. This is what we're doing. This is major disruption. And I join a lot of these calls just to find out what's going on. I have no intention of going anywhere. I love SWBC,
Well,
but
it's good to know. Yeah.
it's that's what's coming down the pipeline. So if you don't think other lenders, mortgage servicers are going to start doing the same thing, that's a reality.
There is certainly a lot of room for disruption. Think about all the revenue that is generated from a real estate transaction with financing. I'm not too concerned about the mortgage end because I know just how tight our industry is. There's a lot of smart people in the mortgage industry, and our margins are very slim. With I just read a report the other day. Only half of the mortgage originators in the U.S. are profitable right now. Only half are profitable, and the profits are slim. It's the margins are very tight. So I'm not too concerned about that, but I get the model. So the mortgage industry and technology haven't really played well together. When I was leading the mortgage association 7, 8 years ago, we talked a lot about the use of technology and just how much simpler the loan process should be. But because of underwriting guidelines, all the governing entities, there are overlaps in entities that technically we cannot abide by all of the rules because the CFPB says one thing, but then uh, the um, the FinCEN says something else, or there's different agencies that govern us, and sometimes their guidelines that overlap. So the point is, technology has been a tough thing for the mortgage industry to adopt, and I see it recently catching up very quickly, and a lot of money being spent. I mean, that was Rocket's price tag to acquire Redfin, but the amount of money that they're spending on technology is crazy. Lots of money.
Yes.
Mm.
The number one factor in loan costs is origination costs. Okay. And part of that is that these big companies, and going back to what the technology side of it, right? Everybody's been stuck in this old way of doing things. And a lot of these big companies just take everything and throw it against the wall, see if it sticks,
Yeah.
which raises the overall loan costs across the board. So now the technology is coming along where that's going to be coming down because there's going to be more automated systems to do all that work. Um, so that's the idea. That's what I'm working on a project for, is to bring the loan cost down. So the same amount of people can do 4 times the work, right? You still have to have eyeballs on it because there's still going to be all the compliance things behind it, but
Hmm.
the amount of work and time that you can to close deals is going to shrink considerably. So I'm excited for that because it's I'm working on it through and through. But to what you were saying was simply that technology is taking a long time to catch up.
Right. Now that we have it, now that we're figuring out, we being the mortgage industry, now that we're figuring out how to use it, here's what we could do. And I'm going to try not to be too overly influenced by Sam Altman and Elon Musk and that 60 Minutes thing I saw the other day from the godfather of AI. Like, there's a 25% chance the robots are going to take out humanity, right? There's probably a 50% chance the robots are going to have a significant impact on mortgage and real estate. Significant impact. And so here's what we could do. With all the data that we have, it would be possible for us, and I'm sure mortgage servicers are doing this, to track our clients' iPhone wherever they're going and geocode. We can already geocode. We can put a geocoder in our office here and track everyone that comes in and out of our office. Google has that. They've had it for a decade already. But we can see where people are going. And so if we know that they're going to one of the parade of homes opens, or they're going to a property that's active on the MLS, and you think, well, how can you do that? When you start getting geeked out on the data and mapping all this stuff out, it is not hard.
Mm-hmm.
If you can track a device, which we can with the data that we have, and you track someone, and yeah, there's privacy laws, right? But it's not covering this area. You could track them when they go to an open house. That could be the trigger. And we've talked about sell scores for quite a while. I mean, sell scores are nothing new to realtors. You guys know what sell scores are. And if we add additional data elements into that sales score to make it more and more accurate, and it's only going to get more and more accurate. I mean, think about the first cell phone the car phone was like this big box, and now it's this. cell scores are only going to get more and more accurate. And so these servicers are going to know when someone is going to be buying a new home. And what are they going to do? So let's talk about what happens with this Rocket and Redfin relationship. What do they do when they score high?
Well, now they know. Now they know. Now they can just ping you with a message, right? I mean, you've opted in all these terms of services. Uber, Uber is a giant one. You know why Uber is so valuable? Because of the data they have on you.
Hmm.
Every time you went on a ride, where'd you go to, right?
Uh,
So it's amazing what their value is, literally because they own this
the data.
data.
Hmm.
Is so crazy. But now they can ping you like, hey, just make it easy. One step, two steps, here you go. And that's where they're going to be taking that information you just talked about from and reaching out to take your clients.
It's crazy. And it's so hard for us as consumers to stay up on all this stuff. And we want to get an Uber ride. So we just say, yeah, I agree. Yeah, I agree. Come pick me up.
Well,
You know,
nobody reads the terms
they
of
don't,
service.
don't read the terms of
Who
service.
does that?
Yeah, right.
You
I
know,
mean, think about at our closings when our clients they e-sign 80% of the packet now.
right.
They're not reading a lot of that stuff. We tell them read every page. Let us know if you have questions.
Right.
If you want to go through it together, let's
Uh-huh.
come into the office and we'll do our Teams or whatever, go over it. So the data is so important, and as a mortgage servicer, it's so vital to know what is happening with your loan. And I wasn't really much of a. I mean, before SWBC, we were with a correspondent lender, and we sold our loans off to U.S. Bank and PennyMac and Freedom Mortgage and Chase, and we sold them all off, and it was no wonder why it was hard for us to retain our clients in that kind of a model, because we were no longer in front of them all the time.
Correct.
And so the number one thing beyond finding out where your clients' loans are serviced is what can you do to better stay in front of your database.
Right. And that's where, like, I've made a commitment. And granted, like you, it's hard. It's hard to stay in front of you people 4 times a year. I mean, it's just to make those calls, right?
Yeah.
And like, time block 10 calls a day. That's the goal. Always, always 10 calls a day. But that's sometimes hard. You get so many things coming at you, new things, new problems, or whatever, this or that. It's hard to do that. But I guess what I'm getting at is, my real estate partners, the majority of my business comes from them, right? I mean,
Hmm.
like 95% of it comes from them. Um, but when I had you're in my database and I know who was your agent. So if, Bob comes back on the market saying, I'm looking to buy a house again. Hey, Bob, have you talked to Brian recently? He was your agent. No, I haven't. Do you want me to reach out to him? Yeah, absolutely. That's the goal, is utilizing us to make sure that, we're not taking we're gonna protect your database as well and give them back to you as much as possible.
Yeah, right. I know we were recently talking about co-branding our mortgage statements, where we could put our realtor partner on the mortgage statement each month to the client.
Yes,
Yeah.
and that I think they have some things in templates in the works for that, from my understanding.
Hmm.
So I'm looking forward to that.
Yeah. I recently started getting better at this, calling all of my closings from the past 2 years. And I always feel like there should be a reason for a call. Calling to check in or follow up is not, there's got to be some reason. So I've been calling all my past clients about their escrow accounts. So SWBC does an escrow analysis in July. And as a lot of you know, home insurance premiums have been going up because of hail claims, cost of labor and materials. Little bit of fraud maybe in there. And now, I mean, it's difficult. So insurance companies have pulled out of Minnesota. So premiums have been going up a lot. And now it's difficult to get insurance on a home that has a roof more than 10 years old, because the insurance companies don't want to insure it.
Right.
So I've been hearing that from an insurance broker and an insurance direct line. So the 10-year or older roof thing is a problem. So I've been proactively calling my clients, and I got to tell you, these are the best calls I've made in the last couple of months. They're very happy to hear from me. They're very appreciative of me being proactive, trying to head off a problem. One of my clients, we discovered their payment's probably going to go up about $280 a month because their insurance went through the roof because of the roof. Yeah. And
Pun intended.
yeah, right. Yeah, that worked out. So just I would say find a reason to stay in touch. Birthdays are great, loan anniversary, purchase anniversary dates. Think about some good reasons to be in touch. Call your clients every spring and fall and remind them to change out their furnace filter. I mean, that's a
Right.
good. I mean, I'd appreciate that call. Like, oh yeah, I better do that. When I go down and
Right.
pull it open, I had a picture the other day. It was like all brown. I'm like, I should have turned this thing out couple months ago. But staying in front of your database is such an important deal. And having a mortgage partner that services their loans is going to be such a big deal, especially long term, especially having these clients around and having a loan officer partner that's going to help stay in touch with your clients and continue to maintain that trust is such a big deal. And so, if you use that to calm the AI waters here and not go crazy about the technology and data and how it's being used, and just remember that it's a people business,
Right.
and being someone you trust is that your clients trust is really a huge deal. And so
Yeah, and going back to the data, right, and going back into being partners, there's technologies out there such as HomeBot, right,
yeah, great
that you
point.
just got sent up, right.
Hmm.
So like what I've done for a lot of their birthdays, like the people when I call them on their birthdays, most of the time they don't answer, right? It's work or whatever, but I simply pull up what their value is online. Like, hey, you bought your house for 260. And I mean, I've just shocked. I've got a couple that literally are 2 and 3 years old, homes, and looking at their values that they've, over the last 3 years, like 70, $80,000 increase based on, just on current market rate. So I leave a little nugget saying, hey, it looks like I think your value of your home has increased significantly over the last 3 years. It's just something, right? Now we have things like HomeBot that will automatically be sending this stuff out to stay in front of them, right? So there's
Yes.
a lot of people probably heard about it before. There's a shared cost to it to get your database in there, so you can get all of your clients in there, and then they get all of our information. That's what's going to really protect us going forward, just to keep our clients.
What I like about HomeBot is they don't come out and directly say this, but they're like the anti Zillow, because their intention is never to use that data to sell it off to other industry professionals like Zillow is doing. And I think the real estate MLSs, they're probably looking at this in hindsight now, thinking that they sold their soul in opening that data to Zillow. And I even heard, like, the other week, I saw a headline, something about Zillow becoming the new MLS.
Yeah,
I mean, talk about being beholden to a technology company. Um, the MLSs, in my opinion, should have never given that data up. But now that they have, like, the cat's out of the bag, it is. But HomeBot's thing that I was really attracted to is that they're only selling their service to the professionals to help them retain their database, and they give our clients a way to see all the information that Zillow and Realtor.com and these other sites that are trying to capture people, they give them all the same information on home searches, property valuations. There's more to it. I haven't had a chance to delve deeply into it, but so I really like that model of having that replacement technology that helps you secure your database. And so it'd be a really great thing to look into. I would love to hear. You'd love to hear from your agent partners. I'd love to hear from mine on looking at HomeBot and what thoughts are. But I think it's a good piece of technology that would help us
yeah,
maintain our database.
yep. I mean, you got to invest some money into it to protect it because it's going to be stolen from you. It just is. It's frankly, if you can't stay in front of people. Yeah, I had an agent on not too long ago, and she had talked about how she the last couple of years just like the times are tough. It is what it is, and she got talking with a coach or someone that kind of mentored her and said, "Well, you've been in this business for 16 years, and you've sold a ton of homes. How often do you pick up the phone and talk to those clients?" I haven't done that. And
Yeah,
again,
same
I
for
try to do
me.
this 4
Yeah,
years. The
same for
same,
me.
but I can
Yeah.
tell you the last 10 years that has not been a strong suit of mine at all. And it's extremely hard. But so she's like, "You're right." And he's like, it's just like when you have a good date with somebody, you go on this date and everything's great, and then all of a sudden you ghost them or they ghost you, right? It's the
Yes.
same thing. You have this great, we dated for a few for a few months while you got about a house, and then done. It's over, right?
Yes.
And you never say anything besides send them a birthday card
Oh yeah,
or a
worst right. They
Christmas
get an
card.
email, happy birthday 6 months later, right? Yeah.
Right,
Yeah.
right. And which everybody knows is all automated now, right?
Yes.
So it's like, oh, okay, great. Picking up the phone, having a conversation. And granted, most of the time they're not going to answer. They're at work or whatever, but a lot of times they do. And when they do, those are conversations that are good. But as long as you're being proactive and reaching out, and that's where like this book has been fantastic. I've listened to it twice now. I mean, it's all about fanatical prospecting. It's all about staying in front of your people, right? Period, right? And and not only that, but like asking the right way to get referral business, right? And or being very hyper specific, like, hey, do you got anybody that's a first time home buyer that you know? Instead of just saying, hey, if you know anybody looking for a house, just remember to come call me. If you ask them in a different way, like, hey, do you know anybody that's got like that could be a first time home buyer this year? And they could be like, oh, my nephew is looking at potentially buying a home this year, right? Or he's at that age. Boom, right? They already start thinking about that instead of it just like being passive. So being very specific. So I love this book. I don't know if you have it, but if you want, come on the show, you get a free copy. So,
There's a lot of art to that and how to ask for referrals, and if you have it framed right, I think it's easy.
Another
And
book is What to Say, what exactly to say, right? For specifically, I think that's the name of it, but it's made for realtors. So that one's a great one to have as well.
I think just reiterating a couple of things, finding out where servicing is done, and then having a good database management system and having good reasons to stay in touch with your clients over time is going to be so paramount to the future of our business, to every realtor's business. Unless you want to work for Hoot and get 2K deal.
Per transaction, right?
Right.
And the funny thing is that there was a realtor that called me and said, "Hey, I'm jumping on this. I think this is going to be great. You should come on board. Blah blah blah. Let me know what your thoughts are." We're having every Monday or no, every day. I think every day they were having these calls, and it's like an hour long call. Um, but specifically, there's going to be, they've talked about buyer's agents going away, right? Because of the whole North settlement, right? Having to pay and doing this, and more of the leads are all coming from online. So the business is there, right? And we just have to make sure we maintain that business.
Absolutely.
All right. Well, Steve, thanks for coming on. It's always energetic. I love having you on.
Yeah.
Everyone like and subscribe. If you have any questions for either Steve or I, you can get his information below or look him up. Steve Furlong, Bloomington, SWBC.
Thanks.
Thanks.